Hey everyone, this is Dr. Duru from Ahan Analytics with the market breadth. We had a great follow through day from previous oversold conditions, and now I have a more well-defined area for the bear market that looks like it's already coming to an end. As a reminder, I do not use a conventional definition of a bear market. Instead, I use a confirmed 200-day moving average breakdown. It's a faster signal and it's more meaningful for conducting trades because honestly, by the time the indices are about 20% below their last all-time high, history shows that's pretty much a time to buy. And in this case, the bear market was again a time to buy. I won't go into all of the things I've been saying during this moment that I'm now going to call an area of agitation, and I call this agitation because we all know that a lot of this churn and volatility was created by headlines about tariffs and geopolitical tensions and so on. And then in Friday's posts and video, I noted how we had a combined Federal Reserve and this supposed tariff flexibility as two things very supportive of the market. And sure enough, Monday delivered. Look at this clean break. Let me zoom in here. Look at this clean break that the S&P 500 had on its gap open. Cleared this big down day. That was the first big 200-day moving average breakdown of the area of agitation. So that meant that this entire period of angst for the market has now already been left behind in the rearview mirror at today's open. And the fact that buyers were able to push pricing not just to the 200-day moving average resistance, but right to the resistance that is created by, guess what? The day the S&P 500 closed on election day. So, of course, we had a big moment in January when all of the post-election gains were already given up. The second time the index hit that level, it held up for only just one day. So now we have to assume that this line is going to be stiff resistance. Accordingly, just in case, I bought a hedge. As I sold some of my short-term positions, I also bought a hedge with a single S&P 500 put option. But having said that, if the S&P 500 breaks out above this line too, I honestly think it's going to be off to the races. You'll be free to ignore all of the headlines to your heart's content and just watch the price action from this point above. Of course, there could be resistance at this declining 50-day moving average, but the good part about that is if you're still a bull around that point, all that means is that you're probably going to get one more chance to buy a dip before the S&P 500 continues soaring higher. Now, all of that is given current conditions as we know them today. As we know, anything can happen and the whole narrative can change just because of the way that the federal government is switching up headlines with us from day to day, week to week. But like I've said in my last post, fortunately, we don't have to wring our hands about politics. Instead, we have the financial market that can give us all the signal we need. Okay, so that's the S&P 500. Now let me go to Swing Trade Bot again. I have a subscription. I'm a big fan, and I pointed out on Friday how we had our first great unified, nearly unified bullish set of signals. Today, those signals got even more bullish. So across all of the indices, the short-term trends are up. We even had such a strong day today that three of the five have long-term up signals. So Swing Train Bot is in a sense confirming what I just told you with the chart, which is it has returned to a very bullish position. The long term is up again, and that of course I think that's representative of the index closing above its 200-day moving average. Finally, look at all these technical signals across the board. We've got a good number of stocks crossing above their 20-day moving averages, which probably were all trending down. And now we have stocks crossing above their 200-day moving averages, which of course takes me to my favorite technical indicator, which is market breadth. Let's go to regular scale. And the percentage of stocks trading above their 50-day moving averages, which I call AT50 for above the 50, did indeed clear a new high. It's back above the 30% level. Just based on market breadth alone, now that it's broken out above 30 again, I think it's all clear to get to the 40s and 50, to the 40s range up to 50 for this oversold bounce. But again, again, all the cautions apply that I just mentioned. And note that none of what I'm saying is a prediction or a guarantee. This is just the signals as best as I can see them for your education. Do your own homework and trade according to your own risk management. Let's take a look at the percentage of stocks trading above their 200-day moving averages. That's AT200 for above the 200. And just like AT50, it cleared a new high. It's at 42%, and it's looking much better. So it's all cleared to get to about 50 if this oversold bounce continues. Okay, now let me go back to logarithmic as we take a look at the NASDAQ, which we know was in an even deeper bear market than the S&P 500. Sure enough, the NASDAQ had a big day, but it's still far short of its 200-day moving average. So it is far from being in the clear. For those of you who are bullish, that of course means that for all these big cap tech names you're chasing, you have a little bit more room to go before you have to worry about resistance. So that's the main lesson there. Recall that on Friday I said that while the small caps probably contributed to the disappointing pullback in market breadth, this is IWM, the iShares Russell 2000 ETF. I bought a call option here on this dip because it's just a trading strategy that I have, and that was a good one as IWM cleared all of this area back here with its gap up and 2.5% gain today. I took profits as a part of my risk management on that. I took profits on that call option. Okay, let's go through a few quick stock charts before I end this. Before I do that, of course, you have to look at the VIX. The VIX is plunged again. Unfortunately, I was not prepared for an additional plunge with put options on VXX, but it is what it is. Now we're all the way down to 17.5. I think the VIX is getting a little complacent. If it gets all the way back down to 1535, 35 is a common pivot point. If it goes below that, I'll have to start worrying about the market already being overly complacent about the risks that are out there. But for the meantime, we'll enjoy this declining VIX as being another bullish signal. All right, let's take a look really quickly at some individual stocks. This is Micron Technology. I pointed out before at how the 200-day moving average was providing relatively stiff resistance. And of course, on Friday, it fell from resistance again with an 8% loss. It benefited today from today's rebound in the markets by 2.3% gain. But, I can't get interested in this kind of stock that's just churning for months on end. I have to wait for a breakout or breakdown before I touch Micron again. Okay, my favorite move of the day was Robinhood. I am a bull on Robinhood and I am a stockholder in Robinhood. And I've talked about it in my blog, so you can check it out. You can search on Hood on the blog for more details there. It had a fantastic day, 9% up, went into the 50-day moving average resistance. So I'll be on pins and needles waiting to see whether Hood buyers have enough momentum and push to get above that resistance. And of course, if it does, Hood is all clear to challenge its all-time highs all over again. So glad I was buying into the dip on Hood, even though it never reached the 200-day moving average where I would have been even more comfortable getting more aggressive on Hood. Now, one of the many reasons that I think Hood did so well is because I think they did well on their March Madness betting. But also, let me take a quick detour into cryptocurrency. Um, I've been having fun watching Bitcoin. I am a holder of Bitcoin. I've been having fun watching Bitcoin as one of those indicators of risk on, risk off. And over the weekend, I noticed how Bitcoin was looking really strong. I have a few friends, and I'll be talking about my conversations with them in my blog, where I'm constantly trying to convince them that technicals are real and technicals have meaning and need to be paid attention to. So I use the strength in Bitcoin to predict a big open on Monday. So happy, all the financial markets delivered. One of these days, my friends will be convinced that this technical stuff actually has some use. Okay, but anyway, um, I did this side tour because there is a big risk on, risk off moment coming for crypto in the form of Bitcoins pivoting around this 200-day moving average. And you can see that one resolution point has been accomplished, which is breaking out above the 20-day moving average, which is this dotted line, because that was um, acting as resistance earlier. Now we have another proof point, which is this declining 50-day moving average. If the crypto buyers can push a breakout above this, again, it's all systems go, all systems clear for a continued rally. And I suspect that to translate into stocks as well. Okay, so that's Bitcoin. Let's go on to Apollo. Apollo is interesting because I think they do a lot of merger and acquisition type activity. It's representative of how bullish, the deal makers might be on markets. It suffered in the bear market. It is now rebounding strongly. I don't think I'm ever going to trade or buy this one, but I do like to look at it as another sentiment indicator. And if it breaks above its 50-day moving average, that will be another stamp of approval on bullish sentiment. Okay, let's go to, I don't want to do FedEx. Oh, yes. Let's just finish off on Okta. I think the indices are really the most important story here. I'm just pointing out Okta because I got back into the stock today. It just marginally made a new high. It's not really at support where I prefer to buy these kind of plays, but what I am noticing is that it has a lot of space to the upside. Let me just shift this chart around so you can see it to a weekly. And you can see here, look, all systems go, it's all clear. I don't know how long it'll take, but it looks ready to eventually get at least back up to 200 at some point. Um, I don't know how many times it's going to pull back and how volatile it'll be, of course, but I just think that this is being set up for a longer term recovery, and I want to have a piece of it. So I scurried myself back into this one, and we'll see what happens. Okay. Oh, ARK, of course. Oh, two more. Sorry. Let's first look at ARK. Um, as you know, I don't like to say I'm a bull in ARK. I'm more I don't want to miss out on ARK. Whatever you want to call that label, that's my sentiment. And again, I've written about ARK in my blog. I've done other videos. I'm not going to cover the case again here, but I do want to point out that it also made a very bullish 200-day moving average breakout that actually began on Friday. So this is confirmed. As far as I'm concerned, ARK is back into bullish conditions. Of course, if it hits the 50-day moving average resistance, it could pull back. So if you're really a quick trigger trader, you might consider shorting it there. I'm not going to be doing so. I might sell a call option there on my position. But again, I am in this because I want a piece of ARK. If this ETF ever gets its act back together, it could, of course, soar like crazy. Now, I can't talk about ARK's big day, 5.2%, without touching on this. Uh, what would we call this? This explosive stock now of Tesla. So I think anybody who talks about Tesla, whether from a buy or sell, bull or bear standpoint, has to give the first caveat, which is I or they are not trying to make any political statements. I am only looking at what the market is doing with this stock. This is one where I talked a lot to my friends about all the things that I saw about negative sentiment getting overdone and it's setting up to the upside. I did not want to buy into it. I've actually, in full disclosure, I'm using Tesla as a hedge. So I have what I call just in case it completely collapses type hedge, which is a put spread. I can't remember the strikes, but they're well below where they are now, but they are targeted towards one of the bearish analysts' targets. So in the meantime, um, I know it sounds weird that I was predicting this kind of breakout, but I didn't buy into it. But it is what it is. There's lots of ways of making money in the market. I just didn't want to take the trade on Tesla. But again, I'm pointing this out because Tesla is a big position. I think it's still the largest position in ARK. So I can't talk about ARK's big day without talking about what happened with Tesla. And on top of that, I do want to point out that Tesla is a classic case of both when it was selling off hard and now that it's bouncing up. You cannot let politics get in the way of your trading strategy if you're going to trade. Um, so, if you were a big bull on Tesla and you were just buying and buying and buying that downtrend without paying attention to what's going on with sentiment, it really hurt you until these last 2 days. And now, if you are bearish on Tesla and you want to keep pressing your bet and you want to ignore all of these signs that sentiment is turning, that could be to your detriment. And my blog 122 is all about how to trade around the extremes in the market. Tesla went through a very bearish negative extreme. I think it's about to, look, it went up 12% today and it started with what is this, a 5% gain on Friday. We have the federal government basically backing the stock by the president buying cars, putting on a display of Teslas. The Commerce Secretary is recommending buying the stock. So, this is going to be a battleground stock for some time to come. Oh, and we have a former vice presidential candidate talking about how happy he is to wake up every day and seeing this stock flame out and go down. So this is a battleground stock. And, good luck to you if you want to try to trade these swings. All I ask is that you continue to use your discipline and pay attention to the technicals and sentiment which are dominating this trade between actual news. And I think the next actual news is coming in a week, or maybe at the end of this week, which is the delivery numbers, and then actual news will come out next month on earnings. I expect just, reading all the headlines and the data from prior, I expect those um, those fundamental pieces of data to be bad, but you can't predict, given this is a battleground stock, how the market is going to react to that bad news at this point. Because for all we know, for all any of us know, all of the sellers, all of the negative sentiment has already been washed out. And no matter what the news is, the stock may not react to the downside on bad news. So, anyway, that was a long winded way of saying Tesla is a classic case of why sentiment and technicals matter. Let me just be again clear on summarizing the technicals here. You had this big down day, which was 15.4%, and sellers for some reason could not press that final push to get a truly bearish extension. And I've been looking at this 2023 breakout point. Notice how sellers couldn't get it below here, couldn't even test it. And then when the stock tired from the first rebound from this, they still couldn't test it. So that was your second warning that things are probably changing. And then, of course, like I said, with the president and the commerce secretary um, promoting this, you had other signals. Now, all of you bulls and buyers need to watch what happens at 200-day moving average resistance, and then there will be 50-day moving average resistance if Tesla breaks out there. I know this was a lot in a very short time. If you have any questions, you can ask them in the comments. You can also subscribe to this blog, and you'll get alerts when I post new videos like this. Otherwise, in the meantime, take care, and I will see you on the next time.